it's a breath of fresh air to say, like, to hear you guys come and say, I don't even want the trust fund money. I don't want ultra wealthy money. Right. I want to help the blue collar, the middle class, because the way that the world is going right now, it's the death of the middle class is coming. Yep. And you better believe it.
There's no doubt.
3, 2, 1,
Wonderful to have you here, Steven. You're like, first time I met you, I was like, this guy isn't a real human being. He just brings so much love. He's so genuine in everything he does. And just, I very rarely ever meet someone who has more energy than me. You have an absolute gift. It must be a pleasure and a pain to work with you on a day-to-day basis.
Yes.
But no,
that's a good way to describe it.
It's what the CEO needs to do. They need to bring that energy every day. So awesome to have you here today. I'm going to give a quick background, and maybe you guys fill in the gaps of what I'm missing. But super successful business that you guys have run on the real estate secondary side, helping banks, credit unions, mostly local banks, maybe even hard money lenders, DSCR lenders. You guys take their loans, billion-dollar packages, and you help sell them for the banks, the secondary market, to like insurance companies, some of the largest
hedge
institutions
funds,
in the world.
Family offices, other banks.
So that business, you guys were doing incredibly well for a couple years now. And then I believe Steve, you were on the advisory role of a company that basically bought medical scans. I might be getting this a little messed up, but you're buying medical scans, helping people that run medical scan companies offload their accounts receivables, right? Because they're basically they're doing scans and they can't collect on that income because it's tied up in court because there's some sort of injury involved. And so a lot of these medical scan companies have huge account receivables and they can barely make payroll, right?
Correct.
They have to wait years and year and a half to get their payday. And by the time they get their payday, they're like, crap, I haven't been able to buy any Christmas gifts for my children or give out bonuses to my employees or staff up. So there's a huge account receivables issue in the marketplace. The beautiful thing about this asset class is that you guys have a phenomenal way to algorithms to gauge whether or not those medical scans are going to get paid out, right?
Yes.
And so you guys are acquiring these, helping medical scanning companies at scale, acquiring them, putting them on your balance sheet at a massive discount to the payout value, and creating massive returns for your investors. Yeah. Super safe, but also incredibly profitable, which is really why, with the track record that you guys have developed, you on the advisory role of that company, and really being able to buy that company out when the founders needed to sell, you're able to pitch this to some of the largest institutional private equity firms in the world and raise $10 million. Usually you have to go the other way around. You got to raise family and friends money and then you go institutional. But you guys were able to take this business model, the existing track record, take it to some serious institutional players that do an incredible amount of due diligence before laying out a dollar.
Oh, yeah.
You guys did all the hard work, and now you guys are ready to launch and help your family and friends, the common folk, the middle class, really build some sort of life that we all dreamed of growing up, right?
Yeah.
Does that summarize?
Yeah, that was very impressive considering my 6 months since I've been here. So yeah, that's exactly it.
And with him saying all that, it makes me think, wow, dude, we really did a lot.
Yeah, we did.
Yeah.
We did. And
it's hard to raise institutional money, man.
Well, if we didn't have the track record from him, no shot, right? So like if we came to one of those hedge funds or, capital providers with just the idea, that's when you need to raise family and friends first to get the track record.
Correct.
Because we had it, we were able to do it. And now, like you said, we're scaling. And usually the three main reasons we're funding receivables. One, like we have a new client that is a surgical center. They do like pain management stuff, not just MRIs, but pain management, surgeries, whatever. And they're looking to buy open two more facilities. So they need the leverage, right? So they need the capital to buy open up new centers. That's one reason. The other one is straight cash flow, like you said. Or the third would be like there's a brain scan company that is only doing LOP business or a personal injury business. So they don't have any cash flow outside of this. So they're just starting, but they need to, sell everything off the bat in order to continue business. Exactly.
To have
right there.
a decent
Yeah, because
cash conversion cycle.
if the sales cycle is 18 months for them, they can't do business without funding.
What a horrible business, by the way. The medical scan business. It's really hard for a business to spend money and wait 18 months to get paid.
Sure.
Yeah, sometimes longer, right?
Yeah.
There was a case that we did, like a 64-year-old woman was in traffic court. Her kid was like, I don't know, fighting a traffic ticket or whatever it was. She's sitting in the pew of court. A light fixture from the municipal court building came down, cracked her in the head,
Yep.
opened up her skull, all this stuff. It took like 5 years to settle that money.
Yeah.
Oh.
I mean, there was plenty of witnesses. Like, everybody was on the woman's side,
Yeah.
right? But, it still took 5 years to settle that money. So all the doctors that helped that woman from the second the ambulance got there to the second, she's full recovery, right? What are they doing?
Waiting.
Like, it's not like malpractice insurance is like, we'll wait for that 85-year-old woman to collect, right? Or, the medical scan companies, right? The MRI, the X-ray, et cetera.
Yeah.
The ambulance company, right? They're like, dude, I got to make a payment on this.
Yeah.
I have to pay my employee to do that, et cetera, right? So there's overhead. Now, a doctor that accepts someone that's involved in a personal injury lawsuit is pretty much doing it on good graces of maybe the personal injury attorney or just on life to say, hey, you know what? If I help fix them, maybe this case will settle and maybe I'll get paid. But if not, I saved a life.
Wow.
Unfortunately, the business world doesn't say, oh, you saved a life. Here's a high five. You know what? Just stay open. Matter of fact, we'll pay you $2 million to stay open. So unfortunately, since these receivables are tied to a lawsuit and there's that probability or that chance of, no settlement, right? Banks will not put their insured dollars on these assets. So it's not your typical asset-based lending. So now where do these poor guys got to go? They go to Wall Street, right? So the first time I heard about it, Wall Street was buying these things at 10 to 15 cents on the dollar and saying, you're out.
Straight up.
You're out. Whatever I collect, buddy. You don't worry about what I collect. Now, wait a minute. Did Wall Street go to dinner with that personal injury attorney? Did Wall Street, go to med school? Did Wall Street put the shingle on the door? Did all the marketing, right? How did that medical provider get that person in the door? Wall Street's like, I don't care. It's mine. So when we first heard this, we said there's got to be a better way, right? So we started looking into the assets. And the reason why we like diagnostic imaging is because everybody needs it to determine what's up with you, right? No one's just going to say, oh, I think your femur's broken, right? They're going to go in and see what's up.
Right.
So they're the first ones in. Also, the bills are not catastrophic, right? So it's not like you're getting a lumbar fusion or something like that, right? Or, all the crazy surgeries out there, right? It's not like, that bill is going to be 200, 300,000, and then the court's going to turn around, or or the attorney, right? The defendant's going to turn around and say, you know what? God bless you and your 400,000. Listen, I'm giving you like 50 grand.
Right.
Right? You get enough. Okay. So there's a significant disconnect there, right? For what the doctor's billing for surgery and exactly what, the defense is trying to pay him. They're trying to keep that fee as low as possible so that their plaintiff gets paid, and they especially have enough money for their 30% or whatever they're collecting, right? So the diagnostic imaging guy that goes in first, okay, he has a chance to either not get paid at all, right? Or he has to wait the longest because he's in first, okay? If you're doing 200 to 300 scans a month from, let's say you have 10 personal injury, attorneys. They send you 10 buddies. Or, if you have 30, they send you 3 each, right?
Yeah.
I mean, some of the guys have been in the business for 50 years. It's been passed on to their kids. Yeah. So what are they going to do? Let's just say this 85-year-old woman comes to your clinic. She doesn't have insurance, and you know that it's an accident, that you have to wait for it. What are you going to say to her face?
You're helping this woman out, dude.
Of course you're helping her.
You're a sicko if you turn it away.
Right. And because of the business and the industry, right, and how banks will lend on it, some folks, like you just said, are not accepting this personal injury business. They're not. They're only doing elective surgeries, right? Which is like, Nolan and all his athletic friends, stuff like that, right?
Yeah.
They walk into the train, oh, dude, you need a rotator cuff. You got to go see my buddy.
Yeah.
Go to Troy, he'll cut you up, get it done, no problem, right? That's all they want. Huh. Who's hurt more? You know what I mean?
Yeah.
Right? There was another case where like 11-year-old kid was dragged like 6 blocks by a city bus,
Oh,
right?
Yeah.
Insane. And if hospitals said that, oh, we can't accept you because it's tied to a lawsuit, that's messed up, man.
a hospital said that.
No, I'm saying if a hospital.
Oh.
Yeah. Yeah.
But think about it. That's how the banks are squeezing them. And then the opposite side of it, that's how capital markets groups are being, cannibals about the issue, right? So we said, you know what? Screw it. Okay, so now you know all the heartstrings and all the stuff that we're reading and all the crazy things. We say, look, you medical provider, how much is your bill? Okay, it's $2,000. I'm going to give you, if Wall Street gives you 10 cents up front and they want to walk away, I'll give you 20 cents up front, right? And then whenever it settles, we'll get our principal plus a small interest.
Yep.
And then anything over that, right, depending on the, because you have to do time value money,
Yeah.
duration.
Depending on when it settles, yeah.
And because we don't have a conservative asset, we have to go to private equity groups, right? Private equity groups have investors they have to answer to.
Yep.
Those guys are going to be like, listen, if I want to get 5% of my money, right,
I'll
I
buy
give it to a
5-year.
bank,
Yeah.
right? I'll put it in a municipal bond
Yeah.
or something,
Yeah.
right? I wouldn't take any risk. So therefore, they want extra interest. So then we have to manage that. The bottom line is that we're 15% from whenever the contract goes out, right? So that's our minimum. So it doesn't matter if it takes us 4 years to get to that 15%. It is what it is. It's like for every 100 cents I give you, we want 115 cents back, flat, not per annum, right? We're not compound. There's a lot of people out there that compound the interest
Yeah.
and all this stuff and squeeze these medical providers to no end. So that's very, very attractive in this market.
Wow, you must be getting a ton of clients.
Yeah. So to that point, anything over the 15, right, that we take, we split with the medical provider.
50-50.
Depending on the year it settles.
Okay.
Because if we
High
have to
value.
wait, yeah, right? So it's 50-50, 60-40, 70-30 as the years go on. Year 1, 2, 3, right?
Gotcha.
But so Steve's more of the, portfolio manager. I'm more on the sales side, bringing in new medical providers. Every time I have explained our financing structure, they've always said, this is the best we've seen. This is the best in the street.
Absolutely.
And that's like, I think I've met, we brought on 5 or 6 new medical providers. And I've met with 5 or 6 new medical providers. Like no one's like went with another funder because there's no better structure out there.
Wow.
And we're doing that because we saw what Wall Street did, and we saw that it's $10 to $15. And most medical providers, when they hear of funding companies, they're like, no, like there's bad rep on the street because they're sharks. They're absolute sharks. They're 10 to 15 cents, and you're out. No back end splits. And then they're also hounding like the attorneys, like, when is this case going to settle? When is this
That's
case
a
going
great
to settle?
point, yeah.
They're hounding him, and we have completely kind of done the opposite of that, right? Like, so we're hiring a third-party servicer to, just check status every like 6 months. We're not going to hound them. We'll put it in the medical provider's hands to kind of give us updates. We're very hands-off in that sense. All we want is to, we have to hit our internal hurdle, and then we're going to split, whatever is over that with you. And that structure has made us, very attractive in the space when it comes to medical providers.
How big do you think this space is in terms of market cap?
It's huge.
Like how much paper how many medical scans can you buy?
So
Well, it's complicated because there's like medical scans, right? There's MRIs.
Yeah.
There's pain injections. There's chiropractic work. There's surgeries. There's so many different actual services tied to a personal injury lawsuit. So we like the MRIs the best because of what Steve said. Like a $200,000 surgery, it's going to probably take longer to settle and also be negotiated harder by all parties involved because it's a big bill.
Yeah.
But when on the lien, it's a $500 or a $2,000, MRI. They're just
Is
like,
that
sure.
first lien position above like the surgery because you're the first one in?
all medical providers are treated equal.
Okay, gotcha.
So, the personal injury attorney will just have a list and that's it.
I just want to run some. I'm so Asian. I gotta ask like the how, your inputs to your performa, right?
That's why I brought him.
Like if you buy 100, and I might be asking the questions wrong, but let's just assume you buy 100 scans. what MRI scans in that exact niche, right? The first one, I might be saying this wrong, but MRI scans for that old lady and that kid that got tracked for
Right.
6 city blocks, right?
Yep.
You buy 100 of them. What is the average duration of the settlement?
About 2.5 years.
2.5 years. 2.5 years. What's the percentage that they will successfully settle?
About 4. So we see a settlement between the lowest is like 48 cents. The highest is 54 cents.
54 cents.
Well, that's a settlement rate. What about the percentage of
that they'll actually
that
settle.
actual set? Our loss rate's what?
Our loss rate is less than 5.
Less than 5%.
Less than 1% right now.
So, wow. So let's just say conservative. 95% of the scans that you acquire,
Yep.
they settle at between 48 and 54 cents.
That's right.
Right. So we're talking about 95 on 100.
Just use 50 cents.
50 cents.
Right.
50. So you're basically getting paid 50 cents on a dollar in 2.5 year duration.
Right.
Right. So if you buy it at 20 cents on the dollar, you're making a 2.5 multiple on your money in 2.5 years.
That's right.
So you're doubling your money every year,
That's right.
right? On the gross level. But you're also accruing, you're getting interest on it on an annual level. So you're getting 15, and then you're doing 50-50 splits. So we're talking about like
Or 60-40 or 70-30.
plus
depending,
125. So you're making like a 1.7 multiple in 2.5 years net to the fund.
Give or take, but
2x return.
so like if our gross is typically 2.5x, right, on any settlement, we'll net almost a 1.45 or something.
1.45.
The reason why is because the medical provider, we always make sure that they're taken care of on the back end. You know, it's not fair for us to own that asset and
Right.
walk away. You know what I mean?
Right.
That who knows how many gifts that medical provider had to buy, that paralegal, or whatever he had to do. Right? How many dinners? How many times he got yelled at by his wife for not showing up on time because he's trying to build business?
Right.
Right? How many times he told his kid, "I'll be right there," but he's late. I mean, all that adds up, right? People
Right.
don't think about that, but hustlers do.
Yeah.
Right? Like I mentioned what's going on with our dads or how I grew up, because everything I got, I had a claw for, right? So I know what it's like when you clawing and building, and then someone just takes it from you.
Yeah.
Right? And that's not okay. So when you look at the medical provider, we try to help them. When you look at the personal injury attorney, we try to help them, because when typical Wall Street, right? If I pay you 10 cents for that asset, like Nolan said, he touched on before, it's now my asset. I want 100 cents. I want 112 cents if I'm going to get it out of the attorney.
Yeah.
Right? So they're steamrolling this poor attorney, right? You know, you don't, the last thing that poor guy needs is like, you know, Morgan Stanley, Goldman Sachs, et cetera, right? Knocking on his door, right, and beating him up over a bill, or his paralegal, right? You know, who people that do have the muscle to hire their own attorney to then go and collect. He's not in it for this. The guy's got a personal injury practice. I mean, there's a ton of them out there. Think about his competition, right?
Yeah.
How does he get those people to call him? Word of mouth, billboards, this, that, right? So he's working his tail off. All of that together, just so, because Wall Street had the money, they just come in and say, take it or leave it.
And they're also targeting a lot of medical providers that need to sell, right?
Need to sell.
And now once they get, steamrolled by these guys, they're not going to go back to them. Like they're just in a bad situation.
They're like MCA lenders.
Right. But
Exactly.
Right. But the folks that are looking to open up 2 new centers, and maybe it's not for cash flow, but they just need leverage, they're going to look for the best.
You're really helping
partnership.
these guys out.
Yeah.
Yeah.
So when they're coming to us, they're like, we like your structure. We need the money to open new centers. We're going with you.
Wow.
And we're still able to, make our investors a shit ton of money.
What does it look like for your investor? So say I come in, I got $100,000 sitting. Say I would like to come into your fund.
So what do you mean if? When?
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 I need a bigger year this year. I'm a real estate guy, but yeah.
So essentially, this is what happens, right? We were just talking about this in the car, and we definitely have flexibility associated with how the investor can choose which vehicle they want. So in other words, it's going to be an open-end fund, right? And since we're mostly going to be dealing with friends and family, right? People that get a nod from a close friend of ours, we don't really have an interest in making someone that has apartment, that's a trust fund baby, or someone that has, a high net worth individual. I'm not interested in taking their money and giving them more money. I want the guys that are hustlers like yourself, like us, that are always out there and saying, you know what, dude, there's got to be a better way to get my money to work for me.
Yeah.
Right? So what we're going to do is we're going to open up an SPV, right, where $10,000 is the minimum, right? So anybody that, that is a friend, or especially anybody that's tied to the show, right, we're going to set up an email for the show where if you'll have the deck, right, you'll have an investment deck and our LOI, and then you can send it to whichever one of
Just message Gia at leveragecompanies.com.
Yeah.
Okay.
And my assistant will send you the deck, and we'll hop on a
That's
call.
it, right?
Yep.
So any of your audience members that want to learn more about Stephen Lewis Capital, they'll be considered a friend. But that's where it kind of stops, right?
Wow.
Honestly, man, I mean,
You're telling me.
we've been in investment banking and I've been in hedge funds for over 20 years. I don't really have any interest in giving another managing director $25 million bonus when me and Nolan and yourself, I mean, this guy's an Ivy League graduate, for God's sakes, right?
Well, not quite, but
Okay.
decent school.
But anyway, right.
Very good school.
Right.
Yeah.
Yeah, Boston College. Yeah, right. I went to Quinnipiac, buddy. So
Good school.
It is a good school now. So anyway, the bottom line is like, right, blue collar guys scratching and clawing, or the kids of those blue collar guys, right, that are like trying to get out from underneath them and make the family expand, right? Don't be afraid, right? I keep going back to my old man. He's very conservative. Like his goal was being conservative and safe. My kids are safe, they're warm, they're healthy. That's it. We're not going to be. There's no investing. You talk to my dad about an investment, he thinks you're stealing money from him right now. Wow. Okay? So, right. The hardest person to sell in the room is my father. And eventually I got him to agree he's going to put 50 grand with us.
Wow.
Only took him, I don't know. I'm 42 years old. So, the whole premise, right, is that's the audience. Those are the folks that we want to reach out to. And also, what does it look for the investor? Well, hopefully a guy doesn't need 10 grand to get back to him in the next month or two, right? We're looking to have several different lockouts or lockup periods, 3, 5, and 7 years, okay? The longer the money is invested, the more time that's going to turn over, the more you're going to crush it. In 2.5 years, our portfolio turned $5.5 million to $8.8 million.
Wow.
Right. So.
Wow.
Right. 2.5 years. So if you can think about that, and then the 8 million rolls over and rolls over.
Right, because like if you think about it,
What the hell? 5 million turned into 8.5.
8.6.
Talking 3.5 over 2.5.
About 2
Whoa,
years.
dude.
Yeah. Because if you think about it, like how we said the average is 2.5 years. That's for like an entire. You give it 100,000, it buys whatever amount of scans, right? Some of those scans are going to settle within 6 months.
Mm-hmm.
Some are going to settle within a year. Some will settle within 18 months, etc. By the 2.5 years, almost the entire thing has settled, right? But the beauty of being in it for the long term is, let's say in the first 6 months, 30 or 40 grand settles. We take that money and buy more scans, and it can just roll.
Compound interest.
Roll.
Yeah.
That's right.
Yeah.
Or even at the end of your first lockout, you have so much left over. Take the principal you want at home, right? If it matters that much to you.
Profit, more scans, right?
Take it home and then play with house money. Right? We all know how it is to play with house money.
Yeah.
Right? You ever been up at a blackjack table? You know what I'm saying?
Exactly.
Yeah. You put your principal on the side, and then there's another pile of chips.
Your lunch and dinner money for next.
Put it in your pocket, and you do it every
Right.
night.
So the guy I come in with 10 grand. I say, you know what? I want a 3-year lock. What kind of returns can I expect in that 3-year period?
So the hurdle that we're going to be setting up is it's 15%, right? So it's 15% a year. And then after that, the split is what, 60-40? Right?
60-40.
Because
With us.
Right, with us. We really want to incentivize people to lock the money in for longer.
Yeah.
Right? So, the shortest tranche, which is 3 years, is 60-40. that split with us. In your favor, though. Right?
In my favor. Okay.
Mm-hmm.
Yeah, yeah. 7 year is 70-30.
Okay.
Right now it's in
5 years, 70-30. 7 year, yeah.
okay. Sorry, 5 years 70-30, and the
7's 80.
what 80
80,
80-20.
20.
Wow.
Yep.
So we're talking about if we break that down, net returns to investors, we're looking in the 20s, like low 20s, pretty conservatively.
Yeah.
And
For
on
the
the 3 year.
on the 3
On the
year.
3 year.
Yeah, yeah.
When you go
So-
into the 5 year, you're looking mid 20s, and then 7 year, you're probably looking at like the 30s.
Yeah.
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 So as a beta test, right? We put some of our money to work. We bought some of the assets, right, underneath Stephen Lewis, and there was a small pool of like $27,000 that went out the door. Right? That money just came back at 48,000 in 270 days. Right.
So that's an example of a batch paying off quick. Sometimes that happens, right?
Right.
And we're conservative with the duration just so people, can manage expectations. But
I will give anybody in this world 27,000 if in 10 months they give me back 48,000.
Absolutely.
Right?
Oh yeah.
I mean, that was just
You
a
know,
joke.
it's amazing what you guys are doing because I started I bought 100 units with my own money over the last like 5 years, and then about 2 years ago I said, you know what, I'll start raising some money from friends and family, and like I probably raised from, let's just say 15 people, friends and family, and I did phenomenal by all of them. Honestly, they all trust me now. Most of them are really grateful, but they're at the average clip is like 50 to 100 grand. Like some of them would come back for 150, but they're not. They're not really making me rich. You could add up all my friends and family, multiply it by 5, and that's one institutional check that's pretty much almost the same level of work now. As the ordinary guy. And so,
well, that's also what real estate commands for, right? Your asset, right, is, let's call it $500,000. So how many guys you have to get, and you're like, listen, I need at least 100 grand from you,
yeah,
right? Our asset is 2,000.
yeah.
And we buy 500 to 1,000 scans in one step, right? So, I mean,
and we're only advancing. If it's $2,000 bill, we're only putting out $500, right? On that.
At this point in my career, like I met a guy at church, right? And he goes, oh, I'm thinking I got like 50,000, 100 grand to invest. And I'm like, He goes, yeah, I'll keep you in mind for like, maybe something that comes up this year, because now I'm like, dude, if you're not coming in with at least 250, 500, like it's becomes, and it makes me feel sad because I did get into the game to help the middle class, to help ordinary people build their wealth and their portfolio. And I know I could help them do that, but it's a breath of fresh air to say, like, to hear you guys come and say, I don't even want the trust fund money. I don't want ultra high wealth, ultra wealthy money.
Right.
I want to help the blue collar, the middle class, because the way that the world is going right now, it's the death of the middle class is coming.
Yep.
And you better believe it.
there's no doubt. No
And
doubt.
I mean, in my old gig with asset management, it's like minimum 250 a clip. So it's like, what can I do for my buddies who are, don't have, it's like, and I mean, for the bigger investors, something to be, if they're, good people, this is a completely non-correlated asset. So one of the reasons why we started it was, one, as you said, in the secondary market loan trading, when a credit crunch happened, this is such a good hedge for real estate. It's such a good hedge for the actual equities. Such a good hedge for bonds. It's such a good hedge for anything that's market variable, because at the end of the day, there are going to be car accidents, there's going to be lawsuits, and there's going to be medical lien financing. Like it is a completely non-correlated asset, which at the returns and the safety of it, there's not many vehicles like it. So for the people who are looking for a risk, not a market, something outside of the market variables, this is such an unbelievable opportunity.
You got 10 grand from me. I got 10 grand in my Roth IRA. I'm coming in on the Stephen Lewis Capital. I'm coming in for 10.
You don't want to wait till you're
Good.
59 and a half.
I'll come in for the 5 years.
That's the other point, right? 59 and a half, right? You know, everybody's always talks about the American dream, getting rich and all this other stuff, right? Well, for a young kid, when does that start? When you're 25 or 26, unless you have, you know, real brass knuckles and you're ready to go out there and fight the fight, how are you getting ahead? You know what I mean?
It's tough.
You know, tell me a few kids that graduated straight from, you know, Yale, Harvard, or any of the Ivy League schools, right? That had the parents or they had the roommates that got them into like a great, you know, job or a career path, right? But what about the kids that are at Harvard and Yale that are overlooked, right? What about those kids that, like, you know, are still applying to Goldman Sachs or still, you know, doing whatever they can, right? That were really in the spirit of like academia and all that other stuff, right? That now, what are they doing? Some of them I know are trading sneakers.
Yeah.
Right? They're doing anything they can to get their hand on an asset and trade and stuff like that. So my point is, right, is that if you went to Ivy League, the chances of you putting on a tool belt to save your life is just not going to happen, right? I mean, thank God for my old man and my family. Whenever I was laid off from Wall Street, I put on a tool belt. That's what I did.
Wow.
Right? I was laid off 4 times in 2 years because of Wall Street. All big investment banks, JP Morgan, whatever. Here's the point that I'm getting at, right, is that everybody talks about start saving when you're young, start putting money away, start doing this, start doing that. But in what? In what? You're going to put money in a 401k? You can't touch it till you're older. An IRA? You just can't touch it till you're older. You're going to buy your own stocks? What stocks are you going to buy? What bonds are you going to buy? If you want to leave it to the professionals, I mean, this is what I've built portfolios for 20 years of my life, right? We built this algorithm when everybody said it was impossible. I did it in 90 days, right? And this thing can underwrite, read, score, and price $20 million worth of MRIs in a day.
Wow.
Right? So
that's insane.
And that's the reason our loss rate is so low, is because we throw, you know, they get a data dump, we'll throw it into it, and it'll score every single one, what the advance rate should be, the probability of it losing, the probability of it settling, when it's going to settle.
Right.
And that's the decision engine that we've been able to underwrite everything with.
I mean, this thing knows, like, if you're a 32-year-old male, right? If you're a 32-year-old male in, like, you know, the Midwest, and you get into an accident, what's your payout going to be? Well, I'm going to tell you, it's going to be $100,000 in 6 months.
Get the hell out of here.
Swear to God.
That's
Data.
insane.
Yeah.
Yeah. It knows. Like, it'll tell you exactly what the payout's going to be and probably and all that stuff.
Yeah.
Gentlemen, I think it's really amazing what you guys are doing for the middle class, giving them an opportunity to invest in really an opportunity that only Wall Street and super high net worth individuals really have access to, especially to come in at such a low clip, $10,000. Like I wouldn't entertain anything under 25, even if you were my blood, right?
Right.
So it really is a unique opportunity for those that want to start putting their money where their mouth's at. Because scared money don't make no money, right? And this is a great entry for people that want to start investing in alternative assets, one without correlation to the stock market or the economy, one that truly has phenomenal risk-adjusted return. So really, really unique business model. I think you guys are doing good things for the people that actually need the help, right? The medical companies that need the help, and you're also serving investors that need the help. And so really, really awesome to see my boys really doing something for the world. I love it, man. If you guys want to, the guests, if you guys want to find out more about how to get in touch with these two guys, Nolan, Steven, just message me. Just send me an email, Steven Lewis with subject, to myself, David at Leverage Companies, and my assistant, Gia, G-I-A, at leveragecompanies.com. And I'll make the introduction, and hopefully you guys can start placing your money where you're going to make some great returns. Awesome, guys. Thank you so much.
Thank
Thank
you.
you.